When we talk about company restructuring, we quite often use the term offshore company. And in most cases, the jurisdiction that will come to your mind would be either Cayman Islands, Panama, British Virgin Islands. In today's video, let's talk about a couple more jurisdictions that could be favorable depending on what is it that you're looking for. Hi, my name is Tijana, and as a part of the strategy team over the years, we have helped many individuals who are high net worth individuals go where they're treated best through getting them better options in immigration, structuring of their businesses, and the asset diversification. In today's video, let's talk about some jurisdictions that might not be as popular as the first choice when it comes to the offshore companies, and the first one that we'll talk about would be the Isle of Man. Isle of Man is the territory where if you do have a company, you could obtain a residence permit, which means that you would be in a British overseas territory, which will give you access to the UK. The main thing against the Isle of Man would be the actual cost of both creation and the maintenance. It's one of the more reputable jurisdictions because it is very similar to the British law, and it will have better banking opportunities. When it comes to the company formation in general, the longest time it takes is to actually collect the documents and fill out all those endless KYC forms that you know about. In Isle of Man, once that part is done, the most difficult part, it only takes about 2 days to actually incorporate the business. The fact that there is no controlled foreign corporation rules in Isle of Man actually makes it a very interesting location for the holding companies. So if you are having an idea of having a holding company in a good low tax jurisdiction that could actually give you even the residence permit, Isle of Man could be the great choice for you, as there is no income taxation. If you want to have a company in Isle of Man, you will have to have economic substance, which means that the director of the company has to be local, and you do have to have a local office as well. Under the rules of Isle of Man, those directors who are local will actually have to be involved in all the payment processing. So they will have to have access to all the bank accounts, not only local in Isle of Man, but also all the accounts the company has elsewhere. And in addition to this, one of the challenges might be the high cost of maintenance and the actual registration of the company. And lastly, about the directors, there is the power dynamics. So if you want to have multiple directors, then let's say there's 2 partners that are outside of Isle of Man, and you want to have only 1 local director, that is not going to be a possibility. So there has to be, for each director outside of Isle of Man that you want to hire, you will have to have an additional local director appointed as well. So Isle of Man in general is a good option, especially for holding companies, but also for the operating entities, depending on your preference. But you should be ready for some of these rules that are not quite common in other offshore jurisdictions. So if you want to be in a more reputable jurisdiction with good banking opportunities and a jurisdiction that is good for not only holding but also operating entities due to the no taxation rule, you should be ready for some of these challenges that I have just mentioned. Next to Isle of Man, we have yet another jurisdiction that could be favorable for you, depending on what you're looking for, and that would be Gibraltar. The tax rates in Gibraltar are 0 to 20%, but Gibraltar is a territorial tax regime, which means that if your company is earning income from outside sources, there will be no taxation. In order to incorporate a company in Gibraltar, you will need 2 directors and 2 shareholders. These can be any nationality. So unlike in Isle of Man, your directors do not have to be local in Gibraltar, and which would actually be favorable because then your income could be considered Gibraltar-based. The remote opening of the company is going to be possible, and just like in case of Isle of Man, the due diligence performed is going to be a very high level. The main benefits of having a company in Gibraltar is actual no taxation, unless of course your income is coming from within the country. So there is no income tax, no capital gains tax, no withholding tax rates, and no royalties tax to be paid in Gibraltar. So after the Brexit happened and UK has cut ties with EU, Gibraltar was able to keep the special status, which means that they were able to continue conducting work with EU countries and UK equally as before. So there is not going to be any restrictions if you're coming from UK or EU or from any other country. When actually establishing a company in Gibraltar would first be that there is lack of privacy. In most offshore jurisdictions, what people like is when they have a company, they have this certain level of privacy that is awarded to them. In Gibraltar, unfortunately, when it comes to the details about the shareholders and directors, those are publicly announced. There is that lack of privacy that might be the main reason why some will decide against incorporating in Gibraltar. The process of due diligence can be quite extensive, just like in case of Isle of Man, but once that process is done, the actual incorporation is quite swift. And even though we have talked about most income being tax-free, there is an income of royalties that will be taxed in Gibraltar at the standard corporate tax rate. Switzerland, usually a country associated with high income, high taxes, but if you want to have a company in Switzerland and pay no tax, it is a possibility if you are not, of course, located in Switzerland and your business is not associated with Switzerland and your clients are not there. So if you want to have a completely offshore company that is in Switzerland, you could end up paying a 0% tax to the country. Switzerland does have a couple of different types of companies to be formed. Some of them are very similar to LLCs, corporations, and the main difference between these is when you start a company, there is a starting capital that is required. So let's say for an LLC in Switzerland, that would be 20,000 francs. For the corporation in Switzerland, that would be actually 100,000 francs. So depending on what type of business you need, the incorporation will be different. In addition to this, there is also a big difference on in which canton do you actually want to incorporate your business. One of the challenges we encounter when it comes to the Swiss company is the actual need for the local director. So just like in case of Isle of Man, in order to incorporate in Switzerland, you do have to have a local director who will be appointed for the company. Even though the company is going to be tax-free for offshore operations, one of the main benefits of the Swiss company would be that there is actually no tax for any offshore operations. And unlike some jurisdictions that actually don't want any economic substance, you can actually take advantage of the fact that your company is in Switzerland because you can have Swiss banking for your company, which is not usually a very easy thing to do with offshore companies. Since Switzerland is not really part of EU, not really part of any larger association of countries, you are going to be enjoying quite a high level of privacy, economic freedom, and multiple other benefits that Switzerland will offer you. When it comes to Switzerland, even though there is going to be no tax on any income that is produced offshore, there is going to be capital tax to pay. Now, this is different from the corporate income tax. In case of Switzerland, and this is where I mentioned it is important to choose which canton you're going to be incorporated in, this tax rate, the capital tax rate, would be on full wealth of the company itself. And these rates will vary from 0.001% to 0.075%. Switzerland does impose tax on dividends distributed to directors who are not located in Switzerland, but there is an option of paying out salaries, bonuses, capital reimbursements to those who are not actually domiciled in Switzerland for tax-free. So if your business needs good banking, if you would like to be in a jurisdiction like Switzerland, paying this very low capital income tax on your wealth of the company might be worth it to get all the perks and benefits of being in such jurisdiction. And the fourth jurisdiction we'll talk about today is, next to Switzerland, probably one of the best jurisdictions for banking, for business itself, and that would be Singapore. Singapore does have a local businesses that you can establish that could be favorable anyway, but they also have the option to have an offshore company established in Singapore. Now, unlike Switzerland, Singapore can be completely tax-free, but there is quite a few requirements that you need to be cautious of, which means that you cannot have local directors, board members cannot have meetings in Singapore, absolutely no work can be done in Singapore. But in addition to that, if you want to take advantage of Singapore banking, it would probably be the best not to have the offshore company in Singapore, because if you have local banks personally as a shareholder, or for the company, then that would mean that you are creating some sort of a permanent establishment in the country, and that would make your company actually taxable. What is important is that for this offshore Singapore company, not to receive any income from Singapore, because that is going to be taxed by Singapore. Now, the income that is exempt would be the foreign source dividends, foreign source service income, and foreign branch profits as well. Even though if you are ready not to have Singapore bank accounts and give up on that and have the offshore company with no tax, you have to be prepared that you will be subject to somewhat scrutiny on checking where your income is coming from, because they will be performing due diligence on your company to make sure that what you initially have reported is still standing true years later. So there might be some audits and annual requirements to actually prove that no income that you receive is from Singapore and that no work is performed in the country. I hope you have enjoyed this video. If you have any questions, please leave a comment down below. We'll make sure to give an answer to you. Check out our other videos on the channel, and if you would like us to assist you to change your life and go where you're treated best, go to our webpage and apply to become our client. Thank you.